Hello traders, the title of the video is Mastering Dow Jones Index Elliott Wave Count Like an Expert. Or do you want to master the Dow Jones Index Elliott Wave Count like an expert? Well, you are at the right place and also at the right time. Let's begin our Elliott Wave Count for the Dow Jones Index. Alright. So I have put my lines here for some time. Traders that are following us at 24 Elliott Wave YouTube channel. If you remember, we have the first wave on the monthly chart. This is the first wave. The second wave, let's zoom into it so trader can see first wave, second wave, and we have the third wave right there. Let's change the color of the third wave into orange. Oops, not very clear. I'll use a dark green. So that's our third wave there. Alright, followed by the fourth Elliott wave. Going to change the color of the fourth wave into pink. Oh, I've done something else. Alright. Okay, leave that one there. The fourth wave into pink. And we are now in the fifth Elliott wave. Fifth Elliott wave, I'll use orange. So that's our fifth Elliott wave that is developing right here. Alright, so first wave, second wave. Alright, change the color into blue. That's our second wave right there. Blue is not very good. Let's use red. So first wave, second wave, third wave, fourth wave, and a fifth wave on the monthly chart. So this is my preliminary wave count for the Dow Jones on the monthly chart. We are now in the fifth Elliott wave. There is a target that the professionals are watching. All right. This target of 21691. The price now above that target level. That's a target level 21691. We remember the three questions that we must ask if we want to perform a valid chart analysis. Where are we now? Where are we going? Okay, what has happened before? So there is a video that I want to recommend to traders that want to master the Dow Jones chart analysis. The title of that video is How to Trade the Beast Dow Jones Index Like the Masters at 24 Stock Trader YouTube channel. All right. So that video will be posted at 24 Stock Trader YouTube channel. How to trade the Beast Dow Jones Index like the Masters. So if you watch that video, you understand why 21691 is a target for the Dow Jones. All right. The price now above that target level. All right. And there is another key level that the professional are watching. There is another level, 24670. If you watch that video, you'll understand why 24670 is also a key level that the professional are watching. If we draw the median line between the first key level, 21691, and the 24670, the median line is at the 22997. 22997. So draw those lines on your chart, even if you are Fibonacci trader. First wave, second wave, third wave, okay, fourth wave. We are now in the fifth wave. That fifth wave that being extended can be prolonged up to, okay, the level of 24670. But there is a midpoint target at 22997. Very important, all right? So this is my preliminary wave count on the monthly chart, following our guideline. The price form an inverted head and shoulder chart pattern on the monthly chart right here. Okay, 2009. We start counting first wave from here, second wave, almost cancel the first wave, third wave, fourth wave, and the fifth wave. But if we stop only on the monthly chart with that wave count, that will be a mistake. What do we need to do now? We need to combine the Elliott wave count on the monthly chart with a higher degree Elliott wave count to see the bigger picture. This is about, all right, mastering Dow Jones Index area wave count like an expert. All right. So we will say we are now in the fifth wave, but we are in the fifth wave on the monthly chart. Now let's go to the yearly chart and see, okay, the higher degree waves. Too many lines, I can't remove them because I need them. I leave them there for now, all right. So on the yearly chart, we see that there was this bullish trend. Is it true? That's all I can see now, because sometimes if you zoom into it, you'll notice that the price went up and pulled back. So I'm going to start somewhere here because that makes more sense. So I'll say on a higher degree, on the yearly chart, we see price going up like this. First wave of a higher degree, that's the blue line there. Price went up 1, 2, 3. That's the flat correction, forming the second wave of a higher degree. 1. Can you see? Too many lines, yes or no? 2, 3 on the yearly chart. That's your beautiful, gorgeous, all right, flat correction for the second wave of a higher degree. We're talking about the yearly chart, higher degree. Okay, now you see now. So first wave of a higher degree, here it is, color it into dark green. From somewhere in 1980, I will ignore those ones here because I can't zoom into them, so I'll leave them there with what I got. That's all I can work with, okay, yes or no? So first wave of a higher degree, second wave of a higher degree being a flat correction, 1, 2, 3, that's the flat correction completed, second wave. We are now in the third area wave of a higher degree. Is it a third wave of a higher degree? That's the question. So how do we know that it's truly a third wave of a higher degree instead of a gigantic, a bigger, a flat correction developing here? What we need to do, all right, is to apply Fibonacci extension to the trending first. Put it to the top. Right. If I choose it from here, Fibonacci extension to the first wave of a higher degree. All right. If you do it like this, the third wave, if this is the third wave, see, I have too many now. If while we are counting on the monthly chart, all right. My apology traders. I don't want to remove any of those lines, so my apology traders. So what we were seeing on the monthly chart, 1, 2, 3, 4, 5, okay, still in the fifth wave on the monthly chart. That price action on the monthly chart is the third wave of a higher degree after the second wave, that is a flat correction. So we are now in the third wave of a higher degree. But in order to ascertain or to verify truly that it's a third wave of a higher degree, we must apply Fibonacci extension to the first wave. Why? Because that third wave of a higher degree must break above the 138.2% Fibonacci extension level of the first wave, and it did break above it. See here, that's the 138.2% Fibonacci extension level of the first wave, and you can see that the Dow Jones, break carefully, you can see. That's why I say to you, the most powerful Fibonacci extension level is what? 138.2% level. So he breaks above it and retests it here on the yearly chart. All right, so in 2015, he retested that 138.2% Fibonacci extension level of the first wave of a higher degree. So on a monthly chart, you will say we are in a fifth wave. But when you look on the yearly chart combined in a higher degree, you notice now that we are now in a gigantic third wave of a higher degree. So if you stop only on a monthly chart, you'll be thinking that a correction is going to begin big time on the monthly chart, yes or no? But now that we go on the yearly chart, we see that we are in the third wave. We know that the third wave will be followed by the fourth wave of a higher degree, and very often the fourth wave of a higher degree will usually retrace the third wave of a higher degree by 38.2% level, very often. So our expectation of a gigantic correction on the monthly chart is not true. So we will apply Fibonacci extension to the third wave of a higher degree when it's completed. Probably will complete it at 24670 when it's completed. And the fourth wave is underway. We'll apply Fibonacci extension to the third wave of a higher degree. And we'll be monitoring the reaction of price around the 38.2% Fibonacci retracement level of the third wave of a higher degree, because we are expectation is not guaranteed though. Don't think that exactly what's going to happen. It's just an expectation. Speaking to new traders here. So the expectation that the fourth wave will be shallow. Can be deeper sometimes, but very often shallow. So we apply Fibonacci retracement to that third wave of a higher degree if it's completed to highlight the level of 38.2% Fibonacci retracement level. That will be our target for the end of the fourth wave of a higher degree. But it's just a forecast. The price may print something else out, but with that, okay, we can start planning ahead, all right? Planning ahead. Are you a manager? All right, so if you're a manager in a business, you know how to plan ahead. But you see how I draw my Fibonacci extension to the first wave? It's because I was assuming that I can't see clearly what's going on here. Suppose other trader put it all the way to the low here. What will be the 138.2% level that they are watching? Now we are going to their mind. It's just a little bit above here. So still, it breaks above that 138.2% Fibonacci extension level of the first wave. Therefore, we can now certify that definitely we are now in the third wave of a higher degree. And the price is headed to a target level, and that target is at 24670. How do I know? Watch that video that we titled How to Trade the Beast Dow Jones Index Like the Masters were at the 24 Stock Trader YouTube channel. You understand why 24670 is the target level, the midpoint target 222, midpoint target 22997. All right? Okay, so let's go back again. So we are in the third wave of a higher degree, and we'll expect a fourth wave of a higher degree, something like this, pulling back gently, before we may see the fifth wave of a higher degree. So those who are saying that the market is due for correction, that correction for us on the yearly chart is the fourth wave of a higher degree. When that correction is starting, if it's starting, until it has started, all right, don't call it a correction yet. But when that, pullback that everybody was calling that the market is overbought, is happening, as an Elliott trader, with the information that we have today, choosing my word carefully here, all right, with the information that we have today, we will call it a fourth wave of a higher degree. But as always, if the price prints something else out, we'll come back again, review our Elliott counts, okay, and adjust accordingly without too much pride or arrogance at all. The Elliott count is dynamic. We go one step at a time with the information that we have. We try to go into the mind of other traders. So this is my Elliott count, okay, on a monthly chart and also on a yearly chart. Other traders may disagree with me and say, John, where have you learned about your Elliott count? So we will go into their mind and see how other traders may count their way. We put it aside. Our wave count, we put it aside on a monthly chart. Our wave count on a yearly chart, we put it aside. Now we try to see the wave count, how other crazy traders, even crazy traders, may count their wave. By doing so, we'll compare our wave count with those other wave count, and we are ready, knowing that other traders may react in a certain way, and we have a different expectation to theirs. Right? So this is about mastering Dow Jones Index Elliott count like an expert. So instead of using a monthly chart alone or one time frame alone, instead of using only hourly time frame for your Elliott count, you count your wave on the hourly time frame. You go to the daily chart to validate your hourly time frame wave count. Okay, you count your wave on the monthly chart. I did. You use the yearly chart as a higher degree wave count. We talk about it. If you go to our web page, the secret of Elliott wave count reveal. All right, Elliott wave trader reveal the secret of Elliott wave count. Ratio 1 to 22. Remember that video. So the lower degree wave count compared to the higher degree wave count will give you a better idea about what is happening. So if you stop only, I'm repeating myself, which is good for new traders, for advanced traders, okay, just put an earphone in your ear as I'm speaking to new traders. If you stop only here, you will think that, all right, we are in the fifth wave, you are expecting a bigger correction to correct this. This is true. But that correction that is happening on the 4-hour time frame is just part of that fourth wave that we are expecting on the yearly chart. But as always, we count our way. We don't think that we are the best, Elliott wave trader out there. Just think that I can be wrong. Okay, put it aside. Expectation, price may go up more and then pull back. That's our expectation. But if the price is doing something else, we follow the price. Draw your trend line. That's why I recommend to traders to watch that video. Recommend to traders to watch that video. I took for short trader so you may understand, because you see all this pink trend line, black line, the pitchfork tool. I talk about it at 2-4 stock trader YouTube channel, but I don't want to talk too long, so that's why I'm sending you to 2-4 stock trader YouTube channel so you may know more about it. So we talk about it, how to become a more intelligent Elliott wave trader. We talk about how to use common sense, okay, for Elliott wave trading. So those are the things we are discussing at 2-4 stock trader YouTube channel. Here we are talking only about Elliott wave count. Traders don't want to know anything else, but there are more to it. Common sense for Elliott wave traders, all right, and so on, and so on, and so on. If you have any question or suggestion, put it in the comment section. In due course, I will be recording another video to answer your specific question. If you find this video truly useful, let us know by giving us the thumbs up. If you think that this is another ignorant blah blah blah, alright, give us the thumbs down. That will put us under pressure to improve our next recording. If you find it amazing, feel free to share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about mastering Dow Jones Index, Elliott wave count like an expert. Happy trading to you all, and speak to you soon.